Hi guys, welcome back. It's getting very volatile. IPCA Labs has just come out with their numbers. A net profit growth of 24% is what we've seen for IPCA Labs. Not too bad on the profitability front. There is some forex element as well this time, and revenue growth also not bad actually. 15% growth is what you're seeing. The stock has now suddenly risen from the day's lows. So that's IPCA Labs for you. It's gone through a very tumultuous last 1 year, but not bad in terms of Q2 numbers. EBITDA has also seen a jump of almost about 16% or so. Margins though are flat on a year-on-year basis. But since we're talking about pharma, let's keep it with that. Glenmark has been sulking in trade despite a good revenue growth led by the US, India, Europe and rest of the world business. Earlier today, we spoke to Glenn Saldana, the chairman and managing director of Glenmark. He says that they are expecting a good Q3 and Q4 from their US business, but he also mentioned that things are still very challenging on the pricing front. Take a look.
The US market, continues to witness a huge changing dynamic. I mean, the pricing pressure, while it has reduced on the existing products, I think a lot of the new products, approvals continue to remain challenging, and with the number of players targeting the same product, the competitive landscape is constantly changing. But all in all, I think the US, we've grown the business quarter over quarter, and we're expecting a good Q3 and Q4. We're expecting some strong approvals in Q3 and Q4.
One stock on our radar today, that stock is zooming in trade, and that's Dilip Buildcon. Now, we spoke to the management of the company. Rohan Suryavanshi of the Dilip Buildcon says that they are on track to meet the guidance of 10,000 crore rupees in revenues for FY19, and also adds that there is no slowdown and the debt levels will be unchanged by the end of FY19.
So there is no slowdown, number one. We never gave any quarterly guidance. Now, first, let me tell you how it works for our industry. In our industry, 40% of the revenue comes in the first half and 60% of the revenue comes in the second half. Now, what we've also done on our investor presentation that we've uploaded to the exchanges, we've given the trend for the last 4 years as well. So when you go and see that, it's very much in line with that. We've talked about a guidance of 10,000 crores for this financial year, which should have roughly translated to 4,000 crores in the first half, and that we are on track to meet it. At the end of this financial year, our debt levels will be lower than where we are at right now, and it should be somewhere around to last year's level.
Okay, well, those are Page Industries numbers, very well-tracked and well-owned stock. Looks like the numbers are below street estimates. A revenue growth of just 11% is what Page Industries has reported versus an expectation of a 17% growth this time around. And the revenues have come in at 690 crores, lower than estimates. It's really the operational performance that is a bit of a concerning point. So the expectations for the EBITDA was 168 crores. It's come in at 142 crores, so that's knocked down compared to expectations, and EBITDA margins have also crunched down. Remember, about 23% was the expectation this time around, and they've done much less than that actually, 20%. If we can get a graph of the margins, 20% this quarter compares to 23% in Q1, 24% in Q4 and 20% in Q3. So the margins actually for Page Industries have been falling quarter after quarter, and that is something that the street definitely doesn't like. I'm just going through the presentation. The other expenses for them have jumped up a tad bit to 140 crores versus 125 crores same time last year, and there's definitely some pressure on the margins which you're seeing in the stock as well. Of course, expensive stock, as we all know, and that's why the stock is coming off right now, down almost about 4% odd. The key thing to watch really is what the volume growth would be this time. I reckon with an 11% revenue growth, the volume growth may just scrape through to double digits, not too sure, but margins definitely under a bit of pressure right now, down almost 3.5% there.
All right, so operational performance not looking good, margins under pressure, and therefore that stock has been knocked down as well. So Page Industries on our radar. Let's also talk about JSPL, which reported an operationally good quarter backed by the Indian steel business. And earlier today, we spoke to Naushad Akhtar Ansari, who's the CEO of its steel business, and asked him about the sales volumes target for both Oman as well as the India businesses for FY19.
Oman will be somewhere close to about 1.9 million, somewhere between around that 1.9 to 2 million ton, and in India this number will be somewhere close to about 5.8 million or so. So it is very close to what we originally conceived. Obviously there are we may have marginal shortage, maybe very small amount of shortage.
All right, more coming in from the earnings space, and that's what the markets are really digesting and reacting to. Motherson Sumi, that's the next stock on our radar. It's reported its Q2 numbers just a short while back, and Sonia has been doing all the analysis on that. How's the performance been, Sonia?
Well, it has been quite weak actually for Motherson Sumi, but before that, just one more word on Page Industries. We've been talking about the margin pressure. Even if you look at the top line growth, 11% revenue growth for Page Industries is the slowest that we've seen in at least the last 5 quarters. So on an average, they've been doing about a 17 to 20% revenue growth, and now the top line growth has slowed down to about 11%. So not looking good. That stock is at the low point. Quickly on to Motherson Sumi. That stock as well is under pressure this afternoon. Numbers are not looking good. The overseas subsidiaries are under quite a bit of pressure. In fact, that's dragged the consolidated margins as well, down 50 basis points, coming in at 8.6%. SMR PBV, which is their main entity, the global subsidiary, has been hit because of higher startup costs. So if you look at SMR PBV, the profits are down about 22%. SMP, which is their key pressure pocket this time around, the division which supplies plastic parts like door trims, bumpers, cockpits, that segment has seen an EBITDA fall of 12.5% this time and a revenue growth of just about 4%. So SMP is the key pressure pocket for them. Also, if you look at, the SMR business, which is the rear view mirror business, over there as well, there's been a slowdown this time around. So the growth has hardly been 1% on the top line. All of this has also put pressure on the balance sheet. So the net debt for the company has risen to about 11,300 odd crores. And that's why you're seeing the stock, which is under pressure today.
All right, so that was coming in from the earnings, but not to forget the NCLT space and the entire IBC gamut that we have been tracking so closely. So take a look at Ultratech Cement, and that has really gone up because it's a big win for Ultratech Cement in the Binani case, as the NCLAT today has approved Ultratech Cement's revised resolution plan for the debt-ridden Binani Cement. Ashmit Kumar, our colleague in New Delhi, has been tracking the developments very, very closely, straight from the newsroom. Ashmit, what's next? Is there going to be an appeal, or is it the end of the road for Dalmia Bharat, which is also in the race? And what does this particular judgment say about the entire IBC process in terms of value maximization?
Well, first up, as far as the order itself is concerned, it makes it abundantly clear. The NCLT makes it abundantly clear that the COC, the mandate that has been handed down under the IBC to the COC, has been to maximize the value. With that in mind, that is the setting of the NCLAT order. It also goes on to argue, to in fact reason as a part of the order, that various distinctions have been made as a part of the Rajputana proposal, as part of the Dalmia proposal, and that is discriminatory in nature. Now, keeping in mind both these aspects, number one, the fact that the Ultratech offer is larger by 1,000 crore rupees, the 7,950 is the offer that has been advanced by Ultratech. Given that it's larger, part one, it satisfies the condition of maximization of value. And also the second part is that it meets all the financial and operational creditors 100%. There is no discrimination on similar classes of creditors, and that has been the distinguishing factor. On the back of that, the Ultratech offer has been upheld. Now, this, of course, begs the question, what happens from this point on? Is this the end of the road? Clearly not. The NCLT is an appellate tribunal, and being an appellate tribunal, an appeal against the NCLT order can be filed before the apex court. In fact, we've confirmed with the counsels of the Dalmia Group. They are confirming to us that they will be looking at exploiting legal remedies that are available in the form of a challenge before the apex court. So that challenge is going to happen, of course. But for now, it is a big relief coming in for Ultratech, but clearly not the end of the road. There is still a battle to be fought at the apex court. Back to you.
Okay, all right, Ashmit, thanks a lot for joining us. Let's also get our focus back on the markets now. A couple of these stocks do deserve mention. Some of them have started to fall quite a bit. Dish TV is now down almost about 5% odd. You have NCC Limited, which is down almost about 2.5% as well. Let's get you some market opinion now. We earlier spoke to Indrajit Bhatia, the head of research at Macquarie, to get his sense on the market from the foreign investors' point of view. On the sector-specific bets, he likes a couple of plays in the technology space. Listen in.
We believe that at the margin, yes, investors have started to kind of look more constructive, especially on the foreigner side. I would also say that what's happened to the oil in the last 2-3 weeks has kind of strengthened India's kind of case on that front. So that is where the markets have kind of corrected to more reasonable valuations over the last, I would say, 6 months. So that is making people look more constructively towards markets. Corporate banks was always an area that we liked. ICICI Bank was kind of one of our top picks for some time now. We also believe that this entire IBC process is starting to kind of make clear headway in some of the big ticket NPA issues that we have. We're also looking at situation kind of gradually improving in some other sectors like power. We also expect if SMEs do get enhanced lending from RBI, that could also be a fairly important set of news for that space.